In spawn.
What if I told you there was a strategy with one of the
Minions have spawned. An enemy has been slain. Unstoppable. Shut
What if I told you there was a strategy with one of the highest win rates in the game, was nearly impossible to counter, and is such an easy playstyle that you could watch Netflix on your second monitor and still win the game? You'd probably think it's too good to be true, but no, Riot actually consciously made the choice to add it into the game all the way back in patch 12.13. And that patch single-handedly caused this one champion to become the most popular pick overnight, where she's stayed ever since. The strategy you're about to learn may just be one of the most accessible, beginner-friendly, consistent playstyles we've ever covered, while also being one of the most powerful. So, which champion will we be using to highlight this new strategy? Will it be Vayne tumbling her way in the side lanes to 1v9 carry? No, far too much mechanical skill. Or maybe it's Twitch roaming around the map picking up free kills. No, too much decision making and map awareness. Spoiler alert, it's none other than Sivir, the queen of wave clear. Now, in this guide, we will be walking you through step by step every single phase of the game, teaching you exactly how to use this strategy. But I want to be clear, there are many other champions that can adopt the playstyle you're about to learn. That's why at the end of this guide we have a tier list ranking other champions that can use this strategy. On top of that, there are core macro concepts throughout this guide that can be applied to any role or champion, so trust me, you don't want to miss this one, as there's something to learn for every player regardless of your role. Plus, I think your mind will just be blown away that Riot even allows this strategy to exist. So, as we mentioned, we'll be going into comprehensive detail breaking things down from start to finish. So, we should probably start, well, from the start. Here's what's amazing. I've never seen a strategy more consistent with how the early game plays out. At level 1, your plan is simple. We're going to set up what's called a cheater recall. The first step to doing this is to achieve a minion lead at level 1. Sivir is very consistent with this goal since she has great wave clear at level 1 with her Q ability. As soon as you enter the lane, you want to auto-attack minions non-stop and throw your Q out to hit the minions. One useful tip is to try to aim these level 1 Qs so they hit both the minions and an enemy champion. Doing this will pretty much immediately guarantee you control the lane. Great, so we have the minion advantage. Now, we simply maintain this small minion lead. Notice how I'm no longer spamming my auto attacks. The enemy stopped damaging the wave, and so I did as well. This is important as you don't want to overpush the wave. Overpushing will cause the wave to crash far too early and without enough minions, which will then make it so you can't set up the cheater recall we'll be showing you shortly. When the second wave arrives, don't be afraid to trade with the enemy. You'll be spiking level 2 on them, and so it will either set them up to be all-in, or you'll just get a huge health lead once you do the cheater recall. It's on the second wave, when the third melee minion dies, you'll spike level 2 on them, so be prepared to all in if they don't respect it. In this case, the enemy realizes we'll hit level 2 first and backs off. This is actually perfectly fine. You see, now the wave just slow pushes, meaning we stop damaging the wave and only last it. You want to prevent this second wave to crash into the tower too early. Instead, by slow pushing, the third wave arrives in time to keep the wave outside of the tower. It's on this third wave that has a siege minion, we want to hard crash the wave and push it as fast as possible, and boy can Sivir push fast. Great, now the enemy will be stuck under tower farming the wave you just pushed to them, making them unable to match your recall. At the same time, the wave you pushed will have so many minions that it will take them a long time to actually clear it. And since it takes so long to clear, the fourth enemy wave will actually get stuck on it. When this happens, it causes what's called a rebound. See how the minion wave is closer to their side of the map than ours? Well, this means the minions are pushing to us. This is called the even minion rule. And it happens because the enemy's reinforcing wave arrives sooner, thus focus firing and damaging our minion sooner and causing it to push towards us. This is why the cheater recall works. The enemy can't recall, well we can, and then it pushes back towards us so we hardly lose any minions and have a nice wave built up for us when we get back. And here's what's really cool. Remember, the enemy took damage both from poke and trades, and so we're not only coming back with an item advantage, but also a health and sustain advantage. Your goal here is just to thin out the wave, meaning try to damage the wave to the point where the enemy has around 3 caster minions more than you. This is the sweet spot that will let you hold a freeze indefinitely. In this case, the enemy Kalista knows that being low on health, behind in items, and having no sustain, that she has no choice but to recall. However, by recalling, she's now just bleeding out minions due to her freeze. So by the time she gets back to the lane, we have 31 CS to 21, and this Kalista played near perfect, and it still didn't matter. Keep in mind, she didn't fall for the level 2 all-in, she didn't overstay and die when we got back to lane, and yet she's still behind. That's the power of this strategy. But it doesn't stop here. You know what's really disgusting about this strategy? Is there really is only one way to counter it, and that's to punish Sivir before the full power of her wave clear comes online. And so that naturally poses the question, when does her wave clear come online? Level 9? Level 7? No, it's as early as level 5. At level 5, you will have 3 points in your Q, which means you can clear the entire wave in just one spell rotation. Prior to hitting level 5, it will always take you 2 rotations of your spells, and that leaves you vulnerable to be traded with, since the enemy will just see you use your Q and W on the wave, and then just go aggressive while it's on cooldown. That's why the cheater recall as an opener is so strong. We avoid our early weak levels by getting a push lead and setting up the recall timing to get an item advantage. And remember, the cheater recall will set up a rebound so the wave will push into us. For example, in this game, I'm facing the strong lane duo of Lucian Lulu, who are just way stronger than Sivir early on. But by setting up the cheater recall into a rebound, the wave is now pushed to us. We just thin out the wave to maintain at least a 3 caster minion lead so we can keep it frozen at the safety of our tower. By doing this, you'll eventually hit your level 5 power spike, at which point you unlock insane pushing power where the enemy just doesn't even get to interact with you. And the early laning phase is really that simple. Cheater recall levels 1 to 3 and then freeze off the rebound until level 5. And now that you've unlocked your wave clear, there are 2 key strategies you're going to implement. The first strategy is recall timings. So here I just hit level 5 and check this out. I wait for the next wave to arrive and with a simple W and Q, I clear the whole wave. I then use that wave of mine as a shield, walking forward hoping someone will trade with me as they will instantly lose due to a giant wave attacking them. And as easy as that, we just took half of Morgana's health bar. Keep in mind, you still need some common sense. I'm backing off here since that big wave is now being thinned out and isn't as strong. I wait for my reinforcing wave to arrive, and question time. Will I A, look to use amazing spacing with my 50 auto attack range advantage on Morgana to land free harass? Or will I, just forget it. Spoiler alert, I press W and Q and just clear the entire wave. Same pattern, walk the wave in looking for trades with my minions. You can even use these pushes to start farming plates and landing poke while the enemy tries to last it under tower. Wait a second, look at Sivir's mana. This strategy is completely unsustainable. Skill caps lied to me. I'll just run out of mana and then die in lane. I'll never get diamond. I knew it was too good to be true. Alright, settle down. This is where recall timings come into play. All you have to do is hit W and Q and recall after pushing the wave. And now I'm going to be honest with you guys, what you're about to see may make you think less of me. I'm not proud of it, but I had to do it just to prove a point to you guys. If we jump back a moment, there's one useful trick to make your recall timings insanely effective. Look to hard push the wave right before a siege minion wave spawns. And for those who don't know, a siege minion wave will spawn every third wave. The reason why this works is a siege minion has a lot of health and is slower to clear, giving you more time to head back to lane after you recall. On top of that, it can absorb a ton of tower shots, which prevents the enemy from getting the wave to die to your tower and lets you get back to lane in time. But that's really not what's disgusting though, so some of you may want to close your eyes. You see, when I get back to lane, I clear the siege minion wave, then the next wave is just a normal one, so I clear that one too. Now the next wave arrives, and some of you are probably starting to figure out where I'm going with this. After this wave, a siege minion wave will spawn again. So you know what I do? I shove it, and then I recall again. I know, I literally don't even have to lane against my opponent. Let's all take a moment and just appreciate how this Callista had to literally spend over 3 minutes of her life doing nothing but farming minions under tower. Naturally, when I get back to lane, she's just bored out of her mind and tries to brute force a trade to stop this living hell from continuing. But unfortunately for her, it's only going to get worse. Now, don't worry, I'll be going over shortly exactly why we won this fight against Callista, as it involves a very important trick you'll need to know in order to execute this strategy. But first, I want to cover the second strategy you'll be implementing off your push, roaming. Let's hop into a different game to show you what I mean. So I'm in lane, and boy, can you guess what I'm about to do? That's right, press W and Q. I'm too good at this game. With the wave clearing faster than my self-respect, I now have a massive timing window to go do something before the next wave arrives. We could recall, as we just covered, but we don't need to as we have plenty of mana and aren't sitting on a lot of gold. Instead, I see my jungler is on the bot side of the map and call for dragon since we have it control warded. While all of that happens, the enemy tries to tower dive our mid laner, and so I just go to help clean up the kill. And what do you know? I even make it back to bot lane in time for lunch, which consists of a steady diet of minions. Essentially, you clear waves so fast, you just get this massive timing window that you can really do anything with. For example, in this game, I clear the wave and use the timing window to go help with dragon. I then clear the next wave and go take Krugs with that timing window. Later on in the same game, I clear the wave to go get vision, destroy blast cones, and take a rift scuttle. The point is, with how fast you clear the wave and how the enemy ends up being pinned to their tower, you just have a ton of options to pick from, which is what makes this strategy so consistent. Now, I already know some of you are thinking, well, this all sounds great when you have control of the lane, but I just know something will go wrong in my games. Well, check this out. In this game, my support decided they needed some exercise and just started doing laps around in our jungle. Maybe they enjoyed the scenery, who knows. The result of this was that I was left to 1v2 in bot lane. Here's the thing, your wave clear is so good that the enemy can't really get anything from pushing, as you can just instantly clear the wave. That's what's so insane about this strategy. You're very effective at both the offense and defense. Now, before we move outside of the laning phase, earlier we won that fight against Callista, and I said I'd tell you an important trick you need in order to execute this strategy. Well, here it is. Everything you just learned will work 99.9% of the time as long as you follow this one rule. Always let your support be the one to make contact first. Let me show you what I mean. In this game, we're playing Sivir with a brand support against a Tristana Morgana. You already know what our plan is, we'll get that push advantage to set up the cheater recall. We have one problem though. Our brand support is just kind of sitting AFK. He's not trying to trade, he's not trying to land poke or damage the minions. Shocking, I know. If we pause here, this means I'll be the focus of the enemy trades. I'm the one who's positioned most forward. This is not the positioning you want. You see, as Sivir, you're trying to win mainly through wave control, not through trades. So if you try and trade with the enemy when the wave is in a neutral state like this, you'll just lose and get zoned from the wave after. Notice how every time I auto attack, I'm slightly moving back. I'm trying to move relative to Tristana and Morgana. When they move forward, I'll need to back up until my support is the one in front. I then get hit by one of the craziest hitboxes I've ever seen, but I use one of the tricks I taught you earlier. I use my Q to damage the enemy champion and minions at the same time, and you'll see me kite away instead of forward. I'm trying to get them to focus my brand, not me. Once they do then focus my brand support, I then try to move to help him and trade. Now, I know you're thinking, well, you're pretty low in health, this didn't seem to work at all. Well, this is why you'll want to start longsword and refillable potion. We can just consume all of our refillable potion charges to sustain up and set up that cheater recall on the third wave anyways, which will fill it back up. Now, I want to slow things down here as there's a very important lesson in movement here that you won't catch otherwise. So here, Tristana is making the mistake of initiating a trade onto my support. These are the trades we want where our brand will take damage and we won't. So notice how I click forward to get in a closer position to trade with Tristana. However, Brand continues to walk back, so then I make sure to walk back with him, as I don't want to suddenly be refocused. But then I see him turn around. This signals to me I can turn around as well and try to trade since Brand is the one being focused. But again, Brand walks away, so then I have to turn around and also walk away. When we play this at normal speed, it will literally look like nothing was happening, but there was this whole mechanic going on underneath the surface. Alright, so I begin damaging the wave and again pay attention to my positioning. When I see Morgana or Tristana move forward aggressively, I begin moving backwards. I never want to be the one to make first contact in these trades. Keep in mind, I literally spike level 2 over the opponent and my Brand is just standing a mile back. I don't make the mistake of trying to trade off this level 2 advantage, as I'd still be the first one to make contact. Sivir just isn't good at winning straight up trades, so your priority should always be to get that wave control advantage. If the waves are relatively neutral, then you'll always need to remember to back up until your support makes first contact. Now, the third wave arrives and it probably looks like we can't cheat a recall. I mean, we didn't build up that big minion lead in the first 2 waves. Well, Sivir is kind of just that broken. Sure, we can't clear the whole wave in 1 spell rotation like we can at level 5, but with 2 spell rotations, we're still able to set up a recall timing. Also, our Brand support didn't even match our recall. Like, this is truly one of the worst supports you can have. He sat back and done nothing so far, and doesn't even take a free recall timing with us. Instead, he ends up just having to trade his flash while just kind of sitting there, not even getting minion XP. Yet, it doesn't really matter with the strategy. I get back to lane with full health, renewed sustain, and an item lead, and immediately begin trying to thin out the wave so I can maintain that freeze in front of the tower off the rebound as we covered earlier. But our Brand, with no flash, decides now's the time for him to start harassing and getting aggressive. Check this out though, since Tristana is the one who jumps in and makes first contact, by the end of the fight, sure, our Brand is dead, but Tristana is extremely low in health. I'm actually in a fantastic position. Tristana has no way to push me out of lane due to my health lead, and I'm poised to freeze the wave in front of my tower, meaning if she recalls, she'll
Right. Today is Thursday, September 29th, and this is a recap of the stock market activities today. And folks, I got a good one for you tonight. But before we start, thank you for everybody who joined as a member. Thank you for everybody who's using the thanks button. Thank you for everybody who's pressing the like button, subscribing, leaving a comment. If you're not sure what kind of comment you should leave, just type whatever you ate for breakfast this morning. I mean, think about this as your breakfast diary. Now, I want to do a short market commentary because I want to get this to you as soon as possible. We have an important day tomorrow. But rest assured, over the weekend, we will do a macro deep dive. But tonight, let's recap how the events unfolded today. We have an update from yesterday's conversation about Britain and the insanity that is going on over there. And of course, the bloodbath continues. Overnight, the London Exchange lost over 2% of its value. Right away, U.S. market futures responded by diving down. And now we're hearing from the betting markets, the odds show that Liz Truss might step down by the end of the year. She's been in the job, 2 weeks? And it's already a mess, and she might even resign by the end of the year. And after that, right away, we got the news from Germany. And the inflation rate in Germany shot up higher to 10.9%. This is the first time the inflation rate in Germany reaches double digits since World War II. And in response, U.S. market futures took another dive down. And adding to the misery, right before the U.S. market start, we got the initial jobless claims for the week, and they came out at the lowest level since April. Now, this is supposed to be good news economically. We're not seeing a significant rise in unemployment. If anything, we're seeing unemployment moving down. So this is bad news for the equities market, and the reason is it allows Jerome Powell and the Fed to be even more aggressive, to front load more interest rate hikes to tackle inflation down, and the unemployment rate remains steady. And of course, the geniuses who bought the dip yesterday because the Bank of England decided to wave the white flag, and they assumed the Fed will do the same, well, they poured over $7 billion on the riskiest assets yesterday. And today, they got schooled, they got smacked in the face right away, a massive $7 billion worth of a warm pie right in the face. Why is this happening? See, Bloomberg published this today. It reads, Jerome Powell needs investors to lose money. You got Papa Jerome with the whip, and every time you geniuses buy the dip, Jerome Powell whoops your little booty over and over and over again. Why is he doing this? Well, he told us. If you watch the Dark Powell video that I made, Jay Powell told us in the last FOMC conference that what he's looking at is financial conditions to tighten and to stay tight for as long as it takes for inflation to go down. Well, when the stock market moves higher, financial conditions loosen, and therefore no rally allowed without any merit. What are you talking about now? Hold on, we'll talk about this in a second. What a merit means. But he's not going to allow any rally from this point on. If anything, he wants the stock market to go down and then stabilize in range, because he wants financial conditions to rise higher and then stay there, stay tight for as long as it's going to take inflation down. Because if he tightens financial conditions and people start to freak out and say, oh, the Fed is over tightening, and he start to loosen again, financial conditions are going to loosen and inflation will move higher as a result. He cannot afford to do that. He has to kill the inflation monster, and killing the inflation monster requires tightening financial conditions for a while. What is while means? Well, it means what the Fed said. The Fed said they'll get interest rates to a restrictive level and then keep it there. Now, we can argue what restrictive is. The Fed says 4.5%. I said it's going to be north of 5%, but 5 is a start, and this means that the Fed is not done increasing interest rates. And so long as they continue to increase interest rates, the market will not be able to find a solid bottom. Now, as an investor, as a trader, you're listening to me right now, what does that mean? It means once the Fed gets to that number, let's say it's 5%. Let's assume that the Fed is satisfied with 5% as restrictive, quote unquote. From this point on, the Fed will hold 5%. That is the moment when the market is going to try to find the bottom and then consolidate from that point on in range as the Fed keeps interest rates in that particular restrictive rate, whatever that is. Let's say it is 5. So we still have a little more to go. And I'd rather use this indicator to buy the dip rather than using the sentiment indicators, which a lot of you are doing. A lot of money managers are doing the same. They look at these bearish momentum indicators, bearish sentiment indicators, oversold, overbought indicators, and they say, okay, this is the time to buy the dip because the sentiment is extremely bearish. Now, the problem with this logic is, well, the bearish sentiment will get even more extreme. And therefore, I'm using other indicators, among them what the Fed is actually saying. We're not going to see the bottom until we see the top in interest rates. And for now, we don't have a clear vision where that interest rate is going to be. But there are other indicators that could tell us where that rate is going to be. One of those indicators are coming out tomorrow. And before we talk about that, let's talk about the technical indicators. These are the last 3 remaining defense lines for the bulls. Apple 150, the June lows, and the 200 days moving average. We know that Apple 150 is gone now. Look, we're waiting on the June lows. We got another bounce today, and we're waiting for the 200 days moving average. The likelihood is when one of them breaks, the rest of them will follow. If that happens, then we have another flush down coming. Therefore, if you're debating when to buy the dip, you gotta watch these three levels. One of them already lost, one of them already broken. But we have to give the bulls the benefit of the doubt until all three are gone. And by knowing that, you can save yourself a lot of money by not buying the dip right now, only to find yourself catching a falling knife. A buy the dip opportunity right now will not happen until all three lines of defense are kept for the bulls. On top of that, you need a fundamental catalyst that advances the argument of peak interest rate hikes, not a pivot. See, the bulls need to grow up and become more mature. Forget about peak inflation. That bullshit is not gonna work because inflation is sticky, so the peak really doesn't matter. And on top of that, the Fed pivot argument is stupid because the Fed is not gonna pivot. It's only gonna pivot if the economy is collapsing. You think the market is gonna do okay when the economy is collapsing? What you should be looking for is peak interest rate hikes. When will the Fed reach the so-called restrictive rate and then hold from that point on? And knowing that rate and knowing that timing will give us a better buy the dip opportunity than what we're getting right now. These phony rallies will last for a day or two, fix the oversold conditions technically, and then fade away. Now we have an important piece of data coming out tomorrow, which could give us more clarity on where the peak interest rate hike is. What is the restrictive rate that the Fed is looking for? And this data is PCE inflation. You see, the Fed likes PCE over CPI, and the reason is PCE lays down the true nature of inflation a lot better than the CPI. So it is not a surprise that the Fed likes the PCE over the CPI because it gets them closer to the 2% target. Even though we all know all of this data is cooked, and the true nature of inflation right now, here in real life, stands at double digits territory. But you see, the CPI came out hot in the last reading, and the reason is rents, shelter. You don't need a massive increase month over month in shelter costs for the CPI to shoot up higher. And the reason is housing is about 42% of the formula of the CPI. On the other hand, in the PCE, the share of housing is down to 22.6%. Significant, but not as significant as in the CPI. Yet we have medical care costs, which the PCE gives more weighting to, and we know that these costs are moving higher. Likewise, it gives other goods and services more weighting. It gives a similar weighting for food, beverages, and it gives less weighting for transportation in the CPI. We know transportation costs are moving down. So while the bulls can celebrate that housing has a smaller slice of the PCE compared to the CPI, they might get caught by medical care costs or by the fact that the drop in transportation costs will not show up as much as it did in the CPI because it has a smaller weighting in the PCE. So who knows what the headline rating is going to be, but what we're looking for here is the month-over-month increase in PCE inflation. Last month, the PCE headline was negative 0.1%, and that was celebrated as a drop in inflation. But after the conference by the FOMC, we know what Jerome Powell is looking at. He's looking at core PCE, which is PCE excluding food and energy. In the last reading, this was up 0.1%. So a positive/bullish reading for the market would be if core PCE goes down to 0 month over month, better yet, even negative. However, if core PCE month over month moves higher, let's say 0.2, 0.3, that would be a major problem for the market, and the reason is it will push the Fed to become even more aggressive. It might give the Fed the go-ahead to do another 75, if not 100 basis points increase in the next meeting. So this is what I'm watching for. But we have another market mover coming. This stems from China telling their banks to prepare for a massive dollar dump and yuan buying spree. So the yuan is crashing, the worst year since 1994. And many other currencies are crashing, and the reason is the dollar continues to move higher. Well, here we have the CCP saying we'll put an end to that. We're going to dump a massive amount of dollars. This should push the Dixie, the dollar index, down, and as a result, it could be a catalyst for the stock market, most importantly commodities, to move higher as the Chinese attempt, keyword attempt, to shore up the yen. The last thing to watch out for in tomorrow's session is we have rebalancing. About $26 billion will be sold off in U.S. equities by these pension funds rebalancing, but they will buy a decent amount, at least $16 billion, in buying equities in overseas markets, perhaps emerging markets, who knows. But they're buying overseas and they're dumping domestically, and this should be a major market mover. They might even push the dollar further down. My last thought here is the bears made significant advances as a trade. We are now at a pivotal point. Either we're going to crack below the June lows, we're going to lose the 200 weeks moving average on the S&P 500, and that will open the sinkhole to another massive leg down, or we could have a surprise. Any of these events that could act as a rescue for the bulls in another attempt at a rebound. I don't see China pushing the dollar down as the immediate reason for that. We're watching at critical levels right now. We're watching the June bottom. The S&P 500 is going to hold, is it not going to hold? So who knows when China is going to buy more yuan and dump the dollar. So now we're looking at two things. We're looking at the pension rebalancing. That is negative for the bulls because the assumption, at least for now, they're going to dump a lot of stocks. The only savior could be the core PCE. If it comes out 0 month over month, or better yet negative, you might hear the revival. Or the Fed is going to back off at some point. Or we can see peak interest rate hikes coming perhaps in 2023. And this is a reason to start a rally again. The problem is, will the Fed, assuming that happens to begin with, will the Fed look at the data and agree with the market that they also see an end to interest rate hikes based on core PCE tomorrow? Because if they don't agree with the market, guess what will happen? Jerome Powell is going to whack the little head again. Now, what if the core PCE comes out hotter than expectations? What if it comes out positive by 0.2? Then we're talking about the June lows gone, along with the 200 weeks moving average also gone, and a massive leg to the downside will take place. Therefore, I say tomorrow's session will be extremely important. So let's not prolong this conversation and get you out here early. I'll do that by moving on and covering the stock market information for you, starting with the closing of the indices today. And here we go. The Dow Industrial Average was down by 458.13 points, or a decline of 1.54%. The Nasdaq leading the pack to the downside, losing 314.13 points, or a decline of 2.84%. The S&P 500 in the red, down by 78.57 points, or a decline of 2.11%. The sector's performances, all in the red, shame on all of them. We're not giving any medals here today, and the laggards were led by utilities, cyclicals, and REITs. The advanced decline ratios, NYSE 13% advancing versus 86% declining. The Nasdaq 20% advancing versus 78% declining. What a difference today makes. Yesterday, we were talking about 90% of the breadth in the NYSE advancing. Meanwhile, today we're talking about 86% of the breadth in the NYSE declining. Unbelievable. The volatility is amazing here. About futures, commodities, the dollar was down, not by much as it was yesterday, but it was down. It lost about half a percentage point. The sterling is still riding higher on the flip-flop by the BOE. So what we're seeing right now is the dollar going down. And this is supporting certain commodities to move higher, specifically the most sensitive ones, such as copper, metals. Copper moved higher today by about 2%, but while the dollar is a tailwind for commodities to move higher, when we say the dollar, we mean the dollar moving down. We also have massive headwinds battling against that. And these massive headwinds are Fed tightening, central banks tightening, on top of recession fears. In the news, a slowdown in China, slowdown in Europe, we have this battle between the tailwinds and the headwinds in commodities. And therefore today, energy commodities were down. They lost some of the ground they gained yesterday, not by much though. Both the WTI and Brent were down a little over half a percentage point. Meanwhile, the RBOB gasoline continues to go down. They lost over 2% today, while heating oil down about 1.5%, natural gas down about 1%. And then we have certain rebounds in softs coming from cocoa. OJ futures went higher, of course, in the heels of the hurricane in Florida, a disruption to supplies. You know the story. Yet we have declines, big ones, led by cotton, down over 3.5%, followed by lumber, down over 2.5%, and then coffee futures down about 1.25%. When it comes to meats, muted action for lean hogs, but we have bounces a little over 1% for both live and feeder cattle futures. We talked about metals, muted across the board for precious metals, gold and silver. Yet we have, as we talked about, copper moving higher, and palladium also gained ground of about 2%. On the other hand, platinum was down about 1% or so. Grains, mixed picture, muted action for soybeans, corn, rough rice. Yet we have losses here, led by soybean meal and wheat futures. On the other hand, we have gains led by soybean oil futures, closing at about 2.75%. Then we have gains for canola, a little over 1.5%, and oats, almost 1.5%. All in all, a mixed picture in commodities. But if the dollar continues to move down, then we know we have a sustainable floor/tailwind for commodities. But will the headwinds ease? Are we going to see more data suggesting that the recession risk is moving down? Are we going to get more data suggesting that central banks, in this case the Fed, will ease a little bit? The problem is none of these two are foreseeable, at least in the near future, and therefore the headwinds are also intact, hence the battle. Moving on to the big casino, the options market. What's going on here? The volume moved higher for both Tesla and Apple, yet the options volume remains subdued for the rest of the market. And isn't it interesting that the last two blocks to fall, Apple and Tesla, are seeing increased volatility these days? Both closed the day with about 2.4 million contracts traded for each, and the share of calls in Tesla was 51.5%. On the other hand, puts outweighted calls for Apple, yet again with about 51% of the volume. Amazon at number 3 at around 700,000 contracts traded today, buying more puts. In this case, about 52% of the volume was the trading and buying puts. Now let's look at Apple, because Apple is the most important name in the stock market. Let's look at the options grid for tomorrow's expiration and see where the gravity is. This is the grid for calls, and as you can see, the open interest for calls is absolutely pathetic. The dealer has no incentive at all to buy Apple shares tomorrow, and even though over 135,000 contracts of the 145 calls traded today in an effort to produce a gamma squeeze to keep the stock at 145, that failed, and the reason is, when we look at puts, the open interest for puts out of the money outweighed the open interest for calls out of the money. And therefore, the gravity is to the downside. The risk is for a short gamma, not a long gamma. And the numbers we're looking at 141, 140, 139, these are the numbers with the highest open interest, so 139 should be a floor in tomorrow's trading. But if we see the volume rising higher for 138, for 135, if we see traders rolling down, taking profits from the 140 puts, for example, and rolling to the 135 right away, we could see a big flush down as a result of the short gamma. So for now, heading into tomorrow's session, who has the advantage, at least from a mechanical perspective, looking at one indicator alone, that is Apple, but perhaps the most important one? The answer is bears. Bears have the advantage here. But can the core PCE change the dynamics? We'll see. Here are the unusual activities that took place in the options market today. We start with the ticker LQD. And this is the ETF for corporate trade bonds. Now do yourself a favor and pull up the chart of LQD. The chart made a lower low. It is now trading below the 2020 bottom. I think this is an important message, as if the LQD is sounding the alarm. Something's wrong here. Something will get out of hand. There is a crash underway in corporate bonds. And the question is, how long can it go before something blows up? Anyhow, somebody sees more downside for the LQD, and they bought the 96 puts for the expiration date, October 7th, with expectations the name could move down and lose more than 6.5% of its value by then. They paid around 16 cents a piece, and this trade overall spending around $350,000. And then what about the ticker ARKW? This is one of those Mama Kathy, Tesla-witch ETFs, the next generation ETF, internet, whatever that is. Well, somebody sees a bounce coming for the name, and they bought the 50 calls for the expiration date, October 21st, with expectations the name could move higher and gain more than 9% by then. They paid around $1.35 a piece, and this trade overall spending around $2 million. And then what about Apple? AAPL. Folks, the traders continue to pile in here, buying more puts aggressively so. In this case, somebody bought the 134 puts, with the expiration date of October 7th, with expectations that Apple could lose more than 6% of its value by then. They paid around $1.15 a piece to enter this trade, overall spending around $1.6 million. And then what about the ticker BX, Blackstone? I'm short the name, I've been short for a while now, but we see the name crashing. It's going to crash even more. And we're going to feel good about it because when evil corporations crash, why not? If somebody sees more declines here for Blackstone, they bought the $70 puts for the expiration date, November 18th, with expectations that the name could move down and lose more than 17% of its value by then. They paid around $2.10 a piece to enter this trade, overall spending around $2.5 million. And here it is, GME, GameStop, the apes, or whatever they call themselves. I don't know. Somebody sees the name moving down from this point on, and they bought the 23.75 puts for the expiration date, November 18th, with expectations that GME could move down and lose more than 7% of its value by then. They paid around $3.20 a piece to enter this trade, overall spending around $3.5 million. Watch out for the bets against the XLU too. You see, utilities, the ETF for utilities is the XLU, has been an outperformer, but as of late, I've been seeing more and more bets against the XLU, and usually that happens right before the big crash. I saw the same phenomenon back in 2008, and we're seeing it once again. And I just noticed that I skipped the name at the top of the list, the ticker STWD. This is for Starwood Properties. The company owns a bunch of hotels and I believe a bunch of golf courses or whatever. It is a dividend-paying name, but we have witnessed unusually large options volume this Monday. Somebody knew what's going on here, and they bought a lot of puts. And what do you know? Today the name is down over 9%. And somebody sees more pain to come. They bought the $16 puts for the expiration date, December 16th, with expectations that the name could move down and lose more than 13% of its value by then. They paid around 60 cents a piece to enter this trade, all in all spending around $1.3 million. Continuing with interesting trades, what about the ticker COST, Costco? Somebody's making a major bet here. They bought the 445 puts for the expiration date, November 18th, with expectations that Costco could move down and lose more than 7% of its value by then. They paid around $11 a piece to enter this trade, all in all spending around $5.5 million. And then we have the IWM, the Russell 2000. Somebody sees more downside here. They bought the 157 puts for the expiration date, October October 31st, with expectations. The name could move down and lose more than 5.5% of its value by then. They paid around $3.35 a piece to enter this trade, all in all spending around $1.6 million. And then what about the ticker TSLA, the souffle? Somebody sees more downside coming here, although Tesla has its AI day, whatever that is. More pumping from Reverend Elon, perhaps more empty promises, we'll see. But somebody sees more downside here, and they bought the 235 puts for the expiration date, October 21st, with expectations that Tesla could move down and lose more than 12.5% of its value by then. They paid around $7.25 a piece to enter this trade, all in all spending around $3 million. Here's another big one for DE, the ticker Deer, The ticker is DE, the name is Deer. It has been an outperformer, but perhaps the party's over, because somebody bought the 310 puts for the expiration date, December 16th, with expectations that the name could move down and lose more than 9% of its value by then. They paid around $13.60 a piece to enter this trade, all in all spending around $5.5 million. Now let's look at charts for some of these trades, starting with COST Costco. We talked about the chart before. We have a massive head and shoulder formation in the weekly chart. The trader has the 445 puts. He sees the name moving at a minimum by about 4.5% from this point on. But in reality, the trader is betting that once the chart reaches 445 and it breaks that support, we will see a short gamma that takes us all the way down at around the 390 level, and that would be a decline from this point on, about 16.5%. Then here's the trade for DE, Deer. The trader sees the Fibonacci support being broken. We're talking about 327.5. If that is broken, the name goes down all the way to the next support around 285. So ideally, the trader sees Deer way below 300 by the expiration date. Moving on to the heat map analysis, what do we see here? A sea of Fred, a massacre with few exceptions. Exception number one is Visa in financials, barely in the green, and then we have some big pharma names that performed a lot better, but the most notable outperformer, energy, along with certain materials such as gold and copper. And I tweeted this in the morning. I said, despite a big down day for the market, the dollar is down. It looks as if it is cooling. If I'm buying any dip here, as a short-term trader, it will be in commodities-related stocks. And I did buy the dip using calls in Occidental, the ticker OXY, and Devon Energy, EVN. Both names managed to outperform today. But keep in mind, the market is really jittery. And if we have a nasty surprise in the PCE tomorrow, we could even see names such as Devon and Occidental moving down. So the lesson of the day is always be closing. You're going to play these rebounds, make your buck, quick and fast, and get out. Because we don't have anything right now that says we're out of the woods, even energy and commodities-related stocks. Well, you know the dollar pops higher tomorrow, for whatever reason. Now, let's talk about some corporate news here, and we start with SoftBank, aka the devil. And remember when SoftBank was rigging the options market by false gamma squeezes, buying options ahead of time, making all of these billions of dollars, but nothing really in the fundamentals? All of these vision funds are nothing more than gambling schemes, some would argue Ponzi schemes, and now the tide has turned for SoftBank. Their stock is down big, their investments blew right in their faces, their gambling did not pay off. So who will be punished here? Not the CEO, of course. It's going to be employees. SoftBank is now slashing 30% of the staff in its vision fund. Apparently the vision fund went blind. And then we have news from Meta, aka Facebook, and Zucchiniberg, of course, is another lunatic who's obsessed with the metaverse. This is costing the company. The stock of Meta is trash right now. Of course, at some point, the crash in the stock will be reflected in the company's fundamentals. Zucchini will not be able to keep his army of employees. That's not going to happen, overpaying all of these employees. So now he's putting some of them in a 30-day list that is giving them 1 month to find a new role in the company or leave. Here we go. The tsunami of layoffs. And lastly, what about Google? I don't know if you got one of these, but if you have Stadia, that's gone now. It's a failure. So next year, January 18th, 2023, they're done. They're gone. Off. What does that mean? We're going to lay off all of these employees and engineers from this platform. Moving on to the heat map and ETFs, you see a red losses across the board with few exceptions. Most of these exceptions are in commodities, but bear in mind, they did not outperform by a lot. Most of them were not in the green, were flattish, or barely in the green. We're talking about oil ETFs, such as the OIH, the XLE, pretty much flattish for the day. Gold ETFs, GOE, flattish for the day. Flat is good on a day like today. But besides that, it is a massacre across the board. The growth economy ETFs, be it in tech, be it in healthcare, led to declines today. Now let's move on to charts, and we start with SPY, S&P 500, 30 minutes chart. What do we see here? We're still at the June bottom. Today the chart cracked below the June bottom for the first time. We're talking about 362.16. But by the end of the day, we saw the rescue operation, and SPY closed above 362.16. Okay, we're gonna play this game, let's play the game. If the core PCE doesn't come out supportive tomorrow, we lose the June bottom. But if it does, and the SPY recovers, we have the resistance of 368, number one, and number two would be closing the gap. And here's the daily chart, the continuous contract, S&P 500. Again, we got below the June bottom, but the chart is still holding. And I would say that the June bottom will not be lost once and for all until we see a crossing and a closing below 3,600 in the futures. And therefore, I'm using 3,600 as my support line. Now, the volume is negative. It is above average on a down day, but the momentum indicators are improving a little bit. Look at the RSI, for example. Is it curling its way higher? Is this a reliable point for a bounce? Is the RSI weak enough to produce a pop? The answer is, it is. But at the same time, it could go a lot lower. It could get even more oversold. And you're not out of the woods until you get the confirmation. What is the confirmation? The confirmation is a crossing in the MACD indicator producing green impressions on histogram, and you should be even more conservative by adding a confirmation, not just one tick, one green tick on the histogram, and you say, okay, we're out of the woods. We need to see more. We need to see the chart trading above 3,855. Then we're out of the woods. So now, it all depends on the core CPI tomorrow. If it comes out hotter than expectations, down we go, we crack below 3,600, and the June bottom goes. But if the core CPI comes out supportive, we could see the beginning of the journey in the attempt of recapturing 3,855 for support. The Qs, 30 minutes chart, what's going on here? Unlike the SPY, which has been on the June bottom for a while, the Qs until today did not retest the June bottom. But here it is. Now we got the retest, and the first retest was successful because it produced a bounce by the end of the day. But again, you can't make anything out of it here. You can't say that this is a buy signal until you have the fundamental factor out of the way, and this fundamental factor is the PCE, and after that, earnings. So I don't see how market participants can have the confidence and the conviction to buy right now, knowing that we have not just the PCE tomorrow, but we have corporate earnings. We could see an earnings recession. So the bias for now remains to the downside. The bias for now remains that the Qs should be cracking below 269.29, and the June bottom will be lost. Here's the daily chart, the continuous contract, the Qs. We got the retest, we got a rebound for now. The momentum indicators, the RSI in specific, are improving, but the volume remains above average in 10 days. We need to see the volume cooling off before we say, okay, this is a good point for another rebound high. Absent of that, the June bottom will be gone. What about the IWM, the Russell 2000, 30 minutes chart, what's going on? The IWM has been retesting its own June bottom over and over and over and over again. Let's say at around 164. Now, one way you can look at this action by saying, hey, look, it is holding. It has been retested over and over and over and over again. It is holding, and that is bullish. But there's another side to this, which is if it is solid support, if it is secure support, why didn't the IWM rally higher? Why did it fail to rally? Why did it go down to the same support to recheck? That tells us that there is weakness here. There's a lack of demand by buyers for these June bottoms. Can the core PCE fix that and increase the demand by buyers? There's certainly a possibility. But for now, the way I see the psychology playing is the following. The chart went down to the June bottom, asking for buyers over and over and over again. The buyers did show up, and they got the chart above 170, but that rally frizzled out. And here we are again, retesting the same support. You got to be a sucker to jump in and say, okay, I'm a buyer here, when you just saw and witnessed the last batch of sheep getting slaughtered. So you need something to support you in your decision to buy the dip right now. And that could be the core PCE. We'll see. By the Dixie, the dollar index, what's going on here? We're waiting and waiting for the retest of 111.2. If we see a rebound, we could see an ABC pattern for the dollar. If the dollar continues to move higher, this is bad news for equities, bad news for commodities. On the other hand, if 111.2 does not hold, and we see the dollar going down all the way to the trend line in yellow, that would be positive news for equities that at least we have a tradable top. If that is the case, we will see gold moving higher. Now gold is waiting for the dollar to go down. And the confirmation would be gold cracking above 1,671 and closing the day above that number. But better yet, for me at least, I like to be more conservative here. Use 1,685. I'd like to see it closing above this number before I say, okay, I can see at least a rally here, even if it is in the short run. Here's the daily chart for oil, Brent. The support of 85 remains intact. The bulls have yet to crack above the sloping line of resistance, which is proven over and over and over again to be really, really tough. At what point do the bulls capitulate and say, okay, no more? We can't make it. We tried once and twice, the third time, fourth time. It's not working. It's not happening. If that happens, down we go. 85 has lost the support. 85 has lost the support. We'll see a flush down, kind of sell off in oil. Likewise, if the bulls succeed in cracking above the sloping line of resistance, it's going to be by a massive pop. So we know there is a major move coming here in the oil market. Buckle up. Here's the 10-year yield, the daily chart. After the massive down day, we got a little bit of a rebound. The market bulls are now arguing that this could be a formation of either an A, B, C pattern, reverse A, B, C pattern, meaning we go down to 3.5, or with similar results, meaning going down to 3.5. Is this the beginning of a bear formation? I say too early to say here. Let's not speculate. For now, what we know is it is a reversal, and the reversal is done. It reversed at least 2 days worth of activities in the 10 year. But now what? Can it erase the bullish momentum? That's not going to happen without the 10-year closing below 3.5. Otherwise, this is just a dip, move down to gather some energy. Then we see the 10-year blasting higher. The same goes for the 2-year. They look identical right now, so I'm not going to say anything more than this. TLT weekly chart. What's going on here? Still below 109. We still have a negative impression of the MACD indicator. We still have the RSI diving down. We still have the volume continues to move higher, indicating the sell-off is not over in the TLT. At least not right now. What about the VIX? Perhaps the bulls could look at this. This is the 4 hours chart. The bulls can look at this as a sign for optimism. Why? For one thing, it looks like a formation of a reverse ABC pattern. It looks like a formation of a bear flag. But most importantly, the VIX could not make it above 33, even though we got a massive sell-off in the stock market. What's up with that? The bulls will look at that as a sign for optimism. What about Apple? This is not a sign for optimism because Apple lost 145 to support, so now the chart is way below 150. That's gone. The volume is moving down, moving higher significantly, As we see the stock moving down, the indicators are getting weaker. It appears there's another massive move coming to the downside. Look at the RSI, look at the MACD, there's another flush down before they get oversold, quote unquote. Tesla, now the chart, what's going on here? We talked about the bear flag pattern. We talked about the recent rally in Tesla, and I call it that, as a process to work out the oversold conditions on the RSI. Once that's done, once the chart failed to crack above the gap, 288.49, formed a double top, and after that, you get the flush down right away, all the way down to 267, which is a triple bottom for now. Is it going to hold? Is it not going to hold? In the short run, we could see a bounce. It's not out of the ordinary because the chart is getting a little oversold. But the bottom line here, we watch 267 because if the chart rebounds from that number, and then it reverses course and moves down, and a revisit, that is a sign the chart's going to crack below this number. We will see a flush down because once that happens, the mechanics start to play out, reverse gamma, etc., etc. So if you see a move higher than a slice below 267, this is a sign that you want to jump in and trade some puts. Here's the daily chart. Let's say that 267 is gone to support. After that, we have the gap on the daily chart. And lastly, tulips, Bitcoin, what's going on here? A 4 hours chart. It appears that the reverse ABC pattern is not as strong as we anticipated yesterday because we have consolidation now in an attempt to move higher. The bears will look at this as, okay, if it is not reverse ABC, it is a bear flag pattern. Sooner or later, the chart will go down. But the bulls will look at this as, wait a minute here. What if this is an actual ABC pattern, an actual bull flag? The next move will be revisiting 20,000 resistance. The chart might be successfully cracking above 20,000. Now, apologies. I know a lot of you like to either the bull versus bear, which charts are in the bearish camp or the bullish camp. I forgot to do that tonight. But let's recap here. Which charts give the bulls the best hope? Bitcoin is one from a 4 hours perspective. The VIX is one, also from a 4 hours perspective. And then maybe the dollar and the 10-year if they continue to go down, if they crack below the levels that I talked about. But the rest of the charts remain in the bear's camp. Lastly, moving on to the conclusion of this video, what do we have on the economic calendar tomorrow? We have a busy day starting with the PCE, core PCE inflation most importantly. And then we have real consumer spending, real disposable income, the Chicago PMI, the University of Michigan Consumer Sentiment Index, on top of a lot of Fed zombies speaking, including Vice Chair Braindead and New York Fed President Williams. Remember what the insider said? He said listen to 3 people only: Jerome Powell, Braindead, and Williams. A lot to look forward to in tomorrow's session. A lot of activities about to happen, so I'm not going to keep you here for too long. This is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again over the weekend.
What do you do today? For our family. Bottom stroke.
enemy is unstoppable. Your team has destroyed a turret. Slain. turret has been destroyed. An enemy is legendary.
Marlon, what happened to the car?
What did you do with the car?
I came out, it's gone. I told that guy to wait right there.
Probably the guy took the car.
What do I do?
I don't know.
Why are you laughing at me?
No, for real, I gotta laugh.
What up?
So, somebody stole the car from me. I left it running and I kind of told the guy he could have it, but then I just said watch it for a minute and then the car was gone. He doesn't even have the keys.
So where's the car?
I don't know. I'm going to Brooklyn this morning. And I'm in Brooklyn. This is gonna sound funny, but I'm in Brooklyn looking for Mischief. Mischief magazine. This is your magazine.
This is our magazine. Yeah.
Okay, what is Mischief?
I mean, it's art collective for just making
Art.
art.
How much time do we have left?
I mean, we got 30 minutes until it goes
All right,
live.
let's go. Okay, so explain to me in detail, what is this thing?
All right. I mean, so this is a car we have. We're selling a bunch of keys to this one car. So we'll be able. Anybody that has a key can drive it, can pick it up. Anyone can find out where it is, location-wise.
We've rebuilt the company's zip car if they only had one vehicle.
Yeah.
Your website launches in 11 minutes, and for 20 bucks, anybody in the world can buy a key to this car.
Yep.
Yeah.
But there's only one car, and then everybody has to share it.
Yeah, there's only one car.
So what do you do if like somebody, I don't know, if somebody like crashes it?
We'll find out when it happens.
What if somebody gets pulled over by the cops or gets like $1,000 in speeding tickets? What do you do? What does somebody do if the cops say license and registration? What does the person who has this do?
The registration
It's in the glove
should be in the
compartment.
glove box. So.
Hello from Key for All. The car is currently moving. The car is located at the latitude 40.7185 and longitude minus.
So you get that information and then you just can go and just take the car.
Yeah.
How do you keep people from just chasing you down?
I mean, that's
Drive
gonna
faster.
Do you have any, can I buy a key?
So this is the instruction manual, has everything you need, and then you've got your key fob and your keychain. It'll be blue and then green, and now the doors are open to you and you come on the car.
So I can just take it.
Yeah. You could just say it.
All right, see you guys later. Marlon, I got this car for 20 bucks.
20 bucks?
20 bucks.
I'll give you 15 for it right now.
All right,
15.
I'll give you this car. Okay, look, this is where things went just terribly wrong. I'm like kind of BSing with Marlon here, and look at this guy over his shoulder. See this guy right here? This very interested guy. That guy expressed clearly that he was interested in the car. And I like, it's off camera, but I explained to him that it's like not actually mine, but if you want to borrow it, you can take it. And I'm like, listen, look. And they made 5,000 keys to this car. Like the camera's pointed down. So I explained to him it's not actually my car, but a bunch of thousands of people have the keys. And if he wants it though, he can borrow the car. And then I consult with my dear friend Marlon. Should I give the car to this guy?
Give the guy the car.
And the decision was made. I'll let this guy take the car. But I say to him, all right, it's yours. Just give me 1 minute.
All right.
And I needed a minute because I had like all my bags on me, so I needed to like throw my stuff in my office, grab a can of spray paint because I wanted to spray paint the car, and then take my stuff out of the car. I forgot my stuff was in the car. I should have known, but my stuff was in the car. I just wasn't thinking. And maybe the most critical piece here, I didn't realize I had left the car running even though I had the key. And then I went back outside. Marlon, what happened to the car?
What did you do with the car?
I came out, it was gone. I told that guy to wait right there.
Probably the guy took the car.
I said wait. I have like my phone in it.
Unbelievable. The guy took the car? For real?
He took the car. What do I do?
I don't know.
Why are you laughing at me? Now, it's not technically stolen because I did tell that guy he could have it, but I didn't tell him to take it. I said, wait, my phone was in the car. So I like looked up, find my friends, find my phone. The guy's on the highway somewhere. I'm worried the dude just like got into the tunnel and left because I don't see a PT Cruiser. I came all the way up to Midtown. There's no way I'm gonna find the car. It's like a needle in a haystack. I gotta go back home and rethink this whole thing. My boosted battery died, but I found, what's your name?
Appreciate it.
He's giving me a tow. Back at the studio. With every minute that goes by, I lose it a little bit more. And again, I don't care about the car, it's that my phone was in there. I left it running, and I kind of told the guy he could have it, but then I just said watch it for a minute, and then the car was gone. He doesn't even have the keys.
So where's the car?
I don't know. Can you track the car? I have no phone, I can't do anything. It was my fault. That was really stupid that I left my phone and my other skateboard and all my stuff in the car when I went inside. I don't know what I was thinking. I called one of the guys from Mischief. We're taking my car to go try to recover my phone and my skateboard and maybe even just recover the PT Cruiser. I mean, I still have the key. Either this totally failed or this worked way too well.
Is this for real?
No,
I'm totally fucking serious.
Oh my god.
So are we stealing the car back?
Oh yeah. We have
So we're just gonna take it. We're taking the car.
If we can find it.
What do we do if the guy like confronts us? Like if he's like, it's my car now. I'm serious. Are you guys ready? Do we need a plan? Or are we good?
I mean, I think let's just roll up on the situation and see what's up.
It should be right up here on the right. Should be. It's right there.
It's right there.
You see it?
Yeah. There it is. It's right in front of Kyle.
Right there.
Yeah.
Oh my god, I see it. Okay, hold on.
Welcome to Summoner's Rift.
Yo, you just took off! I said wait! I said wait! Look,
30 seconds until
things
minions
got
spawn.
strange here. Like there was nothing hostile about the interaction with this guy. Like he was totally chill, but it was awkward. Like I told him he could take the car. He didn't break any laws or anything, but he also kind of knew that he shouldn't have taken the car, and also like he had my cell phone in his hand when we pulled up. Look. That's my phone. In the end, I was just happy that the guy was cool and I had a sense of humor about it. And we didn't care because we had stolen the car back anyway, and this whole thing was fun, and I got my stuff back and my skateboard back. So like no hard feelings, but it was very awkward.
Yo, thanks for not reporting it stolen.
Okay, I'll see you later.
Yo, thanks man. Take care.
I don't know. It seemed very odd. The whole situation was so odd.
I'm going to get spray paint. Don't let anybody see me. That's all I wanted to do. Good luck with the whole thing. Let me know where it turns out. I'll see you guys later. I don't have a license.
Hello from T4all. The car is currently moving. The car is located at the latitude 40.676 and longitude -73.890. The current speed is 1.7 miles per hour. Happy hunting.
An ally has been slain.
lose a ton of minions. And likely realizing how bad of a spot she's in, and how she needs to crash.
There's one thing New York is known for, it's the weight of the building. Then it's on to the superstructure, which is usually formed of all the construction sites.